Hello everyone, it's April 14th. Welcome to the Mortgage Brothers Show. I am Eddie Cannell. If you're trying to go through this content as soon as possible, quickly go through, look at the description below. You'll see all these little timestamps to go through the interest rates, the analysis, and the charts, so you can quickly go through and do a shortcut that way. But this is the interest rate update where we go over today's rates. We look at loan scenarios showing you what payment examples look like. So if you're a home buyer or someone looking to refinance or a real estate agent, this is a great channel to subscribe to. So you would click the subscribe, the notification bell, and the like button. If you want us to look at your scenario, tell us about it. If you have a purchase or refinance, let us know what your credit scores are approximately, the estimated value, loan amount. I'll look up some pricing, give you an idea of what it looks like. So just put that in the comments below. And a quick disclaimer before we get into this is this is not financial advice. This is for informational purposes only. The Mortgage Brothers here, we're licensed in only the state of Arizona. Now, even though we're only licensed to do loans, here for borrowers, on purchases and refinances in Arizona, the content of this show is national. So it doesn't matter where you are, what state you are at. All the programs we do here are national. So it's very relevant. And so absolutely fine to subscribe and you'd be well worth it. Okay, so let's get right into the content today. Let me bring up our slide here. So what we're looking at today is a 30-year fix at 4.75%, a 15-year fix at 3.99%, a 5-year adjustable rate mortgage at 3.875%, 30-year fix FHA at 4.375%, 30-year fix VA 4.375%. Here are the loan assumptions below. Next graph is showing the Freddie Mac history all the way back to the 70s. This is the 30-year fix. It gives us a good idea of big picture where rates have been. Especially, look at this, since 1986, they've been stuck ricocheting off this bottom and low. This is basically what they call a channel. It's been stuck in this downward channel, and it just broke out a couple weeks ago as it shot up. And could it stay above that channel? It absolutely could. Long-term trend, I still think, is down. I still think in one way or the other, we're going to have downward pressure. Now, that's the long-term. And I think long-term interest rates we're going to see them going, maybe in the next 3, 4, 5 years, we're still going to have low rates. I don't think we're going back to high rates, where we had them especially 10 years ago, 20 years ago. I don't personally think that the U.S. government's going to stop printing, that the Federal Reserve is going to stop printing money. I think that our national debt is absolutely going to continue to increase, and we're going to have to continually, it'll be a constant battle between the Fed and the Treasury, but what we'll probably see is rates continue to go down. But again, in the short term, in 2022, I don't think we're seeing rates going down below into this channel, but we'll probably see them happen eventually later. Okay, interest rates. This is about a 7-year chart showing you some perspective, but it's what this red. I want you to see that this blue line is the 30-year fix. The orange is a 5-year arm, and then the green is the 15-year fix, and you can see that they just kind of gone up here the last couple, really the last 90 days. But here's inflation. It hit really close to a bottom recently, close to 0% right after COVID. So inflation was about 0% around COVID, and look how high it's gone up to the 8.55. Here's another chart showing the inflation, but just a little longer period, all the way down back to the 50s. About 70 years worth of information here, but you can see that the inflation is at the highest level since 1981. 40 years. Okay, so this is for all of you who are looking at loan scenarios. You want to see, okay, what does it look like? This is a median home price of $470,000 in Maricopa County. Now, for a lot of people in other counties and other states, this will be very similar for a lot of you as well, but here in Maricopa County, it's $470,000. Shows you what the pricing, what the payments would look like for 3% down, 5%, 10, 15, all the way to 30. Here are the payments. I've estimated homeowners insurances and taxes for this scenario. Put in a little HOA payment in there so you can kind of just get what your total payment is. You'll also notice that mortgage insurance is effective if you put less than 20% down. There's a little bit of mortgage insurance in there. Okay, cash, this is your total cash to close, and this is your total interest that you would be paying on that 30-year fix if you kept that loan for 30 years, just to give you an idea. All right, this is a good graph. I like this one. It shows you what the payments would look like in a bar chart. 3% down, this is how much money you would put down, but look, this is what your payment would be. It goes down. The more money you put down, the lower your payments go. But what is this red column over here? That's inflation. Most experts think that inflation, what the home is going to be worth next year will be 7% more. Okay, so if we look at the house today at $470,000, the house next year will be worth 7% more. And in terms of monthly appreciation or inflation, really that's the same thing. It's going to inflate $2,700 a month. And that's equivalent to about 5% down, a person who puts 5% down and what their payment would be. So inflation and that payment are offset. So it's really important that people will ask, well, should I buy now? If the home appreciates, the inflation will be paying essentially for that payment. Okay, so, and then I know that's a big $64 million question is, will homes appreciate this year, next year? How much will they? What will the market do? The important thing is we do think we're in an inflationary market. We do think that especially the markets in Maricopa County and Arizona are strong. And we do think that inflation is going to be something people are going to have to take into account when they are looking at buying a house. So I hope everyone has, if they have any information or questions about us, you can always go to Google Mortgage Brothers team. You can read our reviews. You can see our contact information and reach out to us. And also write us any questions in the comments below. We'll be back tomorrow. Everyone have a great day.
Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.